Hopefully, we're alive. Folks, sorry I'm late. My apologies. And the futures are open, and we have the S&P 500 gapping up here. This is a 5-minute chart. These will all be 5-minute charts unless I say otherwise. Up 0.17%. Now, before we leave this chart, we want to refresh our memories about the price action on Friday. We had Jay Powell come out pretty early on. Initially, knee-jerk reaction to the upside. They're usually wrong. We sold off and sold off very, very hard. Became oversold, rallied back with a strong afternoon. And then in the final minutes of trade, we sold off slightly, not horribly. Now at the open, we are now up spot 19%. And what we want to know is, do we take out the highs of Friday? Now, what we also want to know is if we reverse to start taking out the lows, the afternoon lows on the spiders. Okay. Now it's in God's hands, right? We don't make a lot of decisions until we get a resolution to this open. Do we break out to new higher highs? If we do, the probability of more higher highs is very, very strong. And the inverse is true. So it's up to the market right now to prove to us that it's got the gunpowder, the dry gunpowder, to move up significantly higher, because the weekly charts were not good. I mean, the triple Qs, let's bring them up. Triple Qs, which are up a quarter percentage point. We're now at the highs of the session. They put in a big, big topping tail. I went over this with members on the week ahead commentary. And what that implies is that we have sellers above, folks. And I'm going to go over a chart in a moment of the triple Qs going back to July the 27th. And I said back then on this reversal day that this is what sell-offs are made of. So you've seen a lot of reversals of late, and I suspect that they're going to continue, which is why I want to see my alerts all set up nicely, and I can act quickly as soon as they fire off in one direction or the other. I really don't care either way, because by and large, we are, while market neutral, we have a bias to the short side. And yes, we do own puts protecting our downside risk. Okay. Oh, I screwed that one up. Try that again, Bob. We're going to go to comments in a moment. Okay. Let's pause there. Say hello to folks. My apologies again for being so rudely late. RB, welcome. Why are my comments not showing up here? Hi, all. Great video on SB. Sean, thank you. Yeah, I did that. That was part of the 30-minute chart club. That is published. I think I screwed up, and Franklin could correct me on this. I think I screwed up with the link I sent out to the folks that were on our email list. I sent out the last, and Franklin, correct me if I'm wrong on this or if I'm right, the last link from the last 30-minute chart club. So I kind of screwed people up. My apologies for that. I was wondering why the audience was so low. And at the end of that video, the question I had for the audience was, do we want to reset the $20,000 threshold for that account, say the beginning of January 1, or do we hit a specific price target and then take those profits, move them out of that account and start from 20,000 again? And this is really just to help newer traders as they filter into our audience. So if you have a comment, please leave it below. I really live and breathe and die by your feedback. So it really helps me out quite a bit. So Sean, thank you for that. And that trade is in there right now, waiting to get fired off. Good evening, Pete. Mr. Pete, welcome. Bob and crew, I can't wait to hear Bob has to say about the upcoming market. Thank you, Franklin. Always a gentleman. Larry, Seymour. Hey, Seymour. Thank you, sir. Appreciate that. We will all miss the great Bob. Oh, really? Oh, I'm sorry to hear that. Did you know he was a jiu-jitsu black belt or karate black belt? I'm not sure what martial art, but he was very, very active in the martial arts community. Thank you, sir. Trader Isaac, good evening to you. Danny, welcome. Pat, welcome. TZ Burton, welcome. RB, Bob, can you please cover AMD? It looks like it wants to go back down below 100. Sure. We could do that. That's what we're here for. Okay. So you can see here, I'm going to pause for a moment, that seeing a little bit of stalling action on the Qs right at the highs of Friday. Let's see whether or not they could blow through that. Mark, welcome. Happy Sunday to you, my friend. Pat, you're in AMD as well? Okay, we'll go over that chart. Falcon, hey, Bob, I don't fully know your trading style. Do you set your trades, then leave your house for the day, or do you sit and watch the charts? I try to step away as much as possible because I don't day trade. I'm not a day trader per se. And if you're sitting at your charts and you're just staring and you're trying to see a little bit of a pullback here. If you're trying to divine what your trading strategy is going to be intraday, that is not a trading strategy. That is speculation, and it leaves you susceptible to impulse buying, impulse selling. You really want to go into the trading week, as we did on the 30-minute chart club on the week ahead commentary, with an opinion. You want to have a valid opinion. If it gets invalidated by the market after the close, reset, reevaluate, and go into the next trading day more well informed. And I don't advocate just staring at a screen all day long, because again, it makes you vulnerable to impulse buying and selling. And I always say this constantly to new members, current members. It doesn't matter where you trade, intraday or intra-week, if you're an investor or swing trader. What matters is where you close. It's the quality of the close that matters, not what you're doing at noon or 11 o'clock. Those hours are like flyby hours. They don't matter. What matters is the first hour and the last hour of trade. That's it. Everything else is just noise. Mark B, small account challenge is a great idea. I'll be fun. Oh, good. Thanks, Mark. Thank you for that. Okay. So moving on here, we didn't touch upon the Dow and the Russell. Dow is up spot 17%. Where's my rut? We'll go with the micros. Rut off its highs, up spot 14%. Let's check out the US dollar. As a matter of fact, let's go with the yield first. Yields. Yields are dropping here. That makes it clear as to why we're seeing a gap up here in the market. Okay. Let's check out the dollar. What happened to my dollar? Now, the dollar, I'm a bit suspect of. It rallied big time after hours on Friday. Um, so that I didn't expect, but it looks as though on a daily time frame and on the euro yen, they're going to be better plays than the dollar. Let's check out the euro yen. Euro at the open, or the yen at the open is down, and the euro is down as well. So they're under pressure. Let's check out a longer duration chart here, 4-hour view. All right, so I want to know if the euro, because the euro is more influential than the yen versus the dollar. Okay. Let's move on back to a 5-minute chart. Let's drill in there. We're going to segue now into commodities. We're going to begin with gold. Gold up on the session, giving back some of its opening gains. Silver. Silver looking good here. I mean, silver had a great week. Let's take a look at a weekly view. I mean, really a killer week. Gold was up. It had a good week, but nothing like silver. Silver has a breakout here. We broke out last week. I think we're going to pull back and do a retest of 2390, 2393, the ounce on silver. But this looks pretty darn good, to be honest with you. I'm liking silver. But to like silver, you must be bearish the dollar. And I'm not ready to go into that camp quite yet. Let's take a look at energy. Light sweet crude. All right, so I kind of expected this. Biden, I'll go over this article later on off of Zero Hedge. He locked up like millions of acres of federal lands. You can't drill on them. Typical commie. So that is going to be a boost for oil. Let's check out nat gas. Sorry about that noise. Natural gas gapping up big time. We booked profits on our natural gas strangle last week. Thank God we did. Natural gas gapping up 4%. Now we're going to look to reestablish that position because we're able to say, okay, now we know the direction of nat gas, and we can now reestablish that position going further out in strike and further out in duration in time. We use Boyle, IV percentile, not great, but not horrible. So members expect a new strangle tomorrow on Boyle with this gap up. If they gap it up ridiculously heavy tomorrow morning, What we're going to do is we're going to sell the call side first, allow the commodity to pull back in, and then we'll sell the put side. Each side is going to be opened up individually, so that way we get an edge on other traders. We get a better price for our product. And what's our product? We sell options. That's what we do primarily. Not gas price. Gasoline prices, weekly chart look pretty good. Look at this rip up higher last week on gasoline, and it reflected on the at least the daily chart, maybe on the weekly chart as well. So I'm worried about a rally here on gasoline prices. That's going to, pardon the pun, add fuel to the inflation fire, and that is not good. Moving on to, let's go with, I had a great New York strip on Friday night, celebrating a very good week. However, it was an expensive steak. It was ridiculously expensive. Worth it. Something just happened. QQQ just made new daily higher highs. Let's see the velocity of that move up higher. What I look for here is when they break it out, usually you get follow through because you have a bunch of stops above there. Shorts wanting to get stopped out, and they are bidding it up now. So a strong open here. We're now up 1/3 of a percentage point on the NASDAQ 100. And it's on the back of yields, which is dropping down. All right, back to a 5-minute chart. Feeder, we want live cattle. We want a weekly chart. Oh, this is going up higher. God damn it. That green candlestick is last week's price action. This is a bull flag setup. We're going up higher. You know what? New York strip higher. Okay, that'll just make me work harder throughout the week because I got to make that money back. All right. What else do we want to talk about here? Agriculture. All my symbols are screwed up tonight. Come on. Corn. Very weak price action last week. They tried to break it out. It was a rejection. Soybeans, very good week last week. They broke it out. So soybean prices moving up higher. Wheat prices took it on the chin right at support. No new weekly lower low, but a lot of pressure here on wheat. But I think that this can reverse. So wheat will be interesting into the new trading week. Is there a trade here? This is the ETF. Ooh, IV percentile on Tetrium Commodity Trust wheat is at 60%. So we will be going over WEAT on our chart review, because what we do is we want to sell expensive options, and when you have an IV percentile at 60%, that's a beautiful thing. So the question is, how liquid are these options? And that's always your number one problem. They'll let you in. They sometimes won't let you out. Trust me, I'm in a position right now. Same deal. I have a 63%. I had a 70% profit. Now it's a 63% profit. They won't let me out. Was trading at 6, going out 40 days, reasonable. There are no premiums here. There's not really much premium. All right. Maybe we'll do it. Maybe we won't. We'll take a look at the chart later on, and we'll talk about it more then. I may use the small account for this trade. I think we're done. I think we're done with the futures. Let's check back in with NQ, the NASDAQ 100, 5 minutes sharp. Not a lot of follow through. Let's see if yields are coming back up. No, not really. Okay, let's get to it. Let's check back in with comments. Tom Lou, hey Bob, 30-minute chart club. Good. Pen, please. Thank you, Tom. They're teaming up with Amazon? I thought they were teaming up with somebody else. That's why they got rid of Barstool Sports. Maybe you're right, for all I know. But I thought it was another player out there. How is inflation against the dollar? Are we still high? Right. Is inflation high? Yes, it's very, very high. Listen, inflation's high everywhere. The U.S. dollar is the least dirty shirt in the bin as of right now. And for anybody thinking that the Chinese yuan or renminbi is going to become the next world's reserve currency, you're out of their minds. TFAT, hey Bob, TFAT, welcome. This could be something. Chinese Ministry of Finance, they levy charge on stock trades will fall from 1% to 0. Yeah, they have a lot of problems over there. A lot. Far worse than here right now anyway. We're going to get it. But there's a storm off the coast of this country and on both coasts. But the Chinese are in the midst of it right now. According to Bixware, there's gold in the land that Biden locked up. Okay? That makes sense. Can we short SNA? It seems like auto workers' buying power is diminishing. What's SNA? Oh, Snap-on tools. We'll take a look at it. We'll take a look at that later on. Thumbs up. Hey, folks. Yeah, please. Thank you, Seema. I always forget. Please like, subscribe, hit that notification bell. And if you're not familiar with the terminology that I'm using, there's a 5-part video tutorial below, my top 5 favorite candlestick patterns. It's free. I ask nothing from you because I want people to be educated. Also, we have the 30-minute chart club. We're building a small account from 20,000 to wherever it takes us. So that's up, I don't know, just shy of 4%. We opened it up on August the 11th, so we're doing pretty good with it. We plan on doing another trade this week. I did a video on a live stream on Saturday. It's on YouTube. Check it out, please. But there's a link below, 30-minute chart club, that is eventually going to become a private live stream. TF YouTube channel, China Insider will give you boots on the ground understanding of the devastation happening in that country. Okay. PLTR, Palantir. Okay. let's get to it. Let's talk about the events that could impact the market going into the new trading week. We have earnings which are going to be dying down. I'm going to be interested in Best Buy. I shop there often, but the store looks bare. I mean, really, I don't know. I get uh, a weird vibe, a bad vibe when I walk in there now. So Best Buy coming out, that's going to be interesting. HP after the close on Tuesday. Hovnanian, Ira Hovnanian's company. He's out of New Jersey. That's a home builder. CrowdStrike, Salesforce.com. They're building one of these by me, Five Below, whatever that is. Dollar General. We opened a trade there and closed that trade out. I didn't realize that earnings were coming up, so we got out of that one quickly. We made a couple of bucks on it. Probably flat after commissions. What else do we have coming out? Broadcom, Lululemon. Dell is really a nothing player. VMware. All right, so we're beginning to really trickle down here. I think the two big reports this coming week are going to be Salesforce.com and Broadcom. And we may do post-earnings trades on these. I'm not going to be doing earnings trades on these plays. So our P&L, since we stopped doing earnings trades, just goes like this. Smooth as glass, going up. No cratering, no V's, no valleys, just go smooth and up. So we're going to stick with that game plan of doing post-earnings trades or none at all. And we're just going to trade the market as we normally do, selling premium and getting long or short of a position, either using call spreads or put spreads or common stock or a mixture of common and call. Common and options. Economic data coming out this week. Monday, nothing happening. Tuesday, job openings. Fed Chair Powell be very, very happy to see that number increase. You probably see the stock market rally on an increase in job openings. Actually, I'm sorry, a decrease in job openings. And look at this. It's an employment week. We're going to get ADP coming out on Wednesday. That's the precursor to the Pimp Mac Daddy of all economic reports. That is U.S. non-farm payrolls. They are expecting 165,000 jobs. There was a big miss last month. Unemployment rate, that's a rigged number. Watch this number here. Average hourly wages. Powell will be looking at that with bated breath. He's already got the data. And watch this as well. Average wages year over year. We're also going to get ISM manufacturing coming out. PCE indexes. This is the Fed's favorite measure of inflation coming out on Thursday. So this is going to be a very, very busy week for inflation numbers. So buckle up, folks. Now, Fed Chair Powell came out on Friday. A long way to go. Fed Chair Powell delivers hawkish speech in Jackson Hole. Yes, it was somewhat hawkish. Inflation remains too high. Process of bringing inflation down still has a long way to go, even with more favorable recent readings. 2 months of good data are only the beginning of what needs to build confidence on the inflation path. There was a Fed chairman going back to the early 1970s. His name was Arthur Burns. And what he did was he too quickly stopped his rate hiking campaign and then went into rate cuts. What happened? Inflation came back with a vengeance. Powell is aware of that, and he's worried about being painted with a historical brush that is not favorable. Above trend growth. This is where you got to start getting sick. So if GDP, if economic growth, if opportunity continues, he will work his best to kill it. That's pretty much what that means. He will kill the economy if it continues to grow. Also, signs of job market is not cooling, could also require more Fed action. Can you imagine more of a demonic thing to do? Oh, people are working too much. They're making too much. The economy is growing too much. We have to stop it. What's another option that Jay Powell could do? What could he do instead of doing chemotherapy on the U.S. consumer and the U.S. economy. He can go over to Congress and say, listen, hey, you got to stop spending. You guys got to stop spending. It's out of control. I got to kill this economy so you guys can keep spending. And they're happy to do it because they don't care. They don't care about you, me. Remember Mike Pence getting interviewed by Tucker Carlson a few weeks ago. That guy killed his career forever. He was all about funding for Ukraine and literally said the crisis in the cities in the United States, he didn't say it once, he said it twice, not my problem. He wants to be a president. Anyway, I digress. 2% will remain our inflation target. As is the case, we are navigating by the stars under cloudy skies. The Federal Reserve is always navigating by the stars under cloudy skies because they always get it wrong. Always. Everybody wants to talk about a soft landing. What soft landings do they ever achieve? What, 2000, 2007, 2008, 2020? Give me a break. Okay, so the reason why you got the rally last week in the equity markets off the lows was the yield curve further declined. So the steepening pause. Now, where we closed out last week is a support level that we saw several months ago, right here, December of 2022. So where we need to start getting very, very worried about the yield curve having a negative impact on the equity market is this. Look at that. We had broken out. That was a breakout point failure. I didn't even realize that. If we break out and above this most recent high and we close there, buckle up, folks, because equities are going to be under a lot of pressure. Now, Powell is continuing, and I applaud him for rolling debt off the balance sheet. What I don't applaud him for is the way he's going about the chemotherapy on the U.S. economy. Although he's not an elected official and he's worried about not being chairman the next go-around, he can't tell Congress what to do, but he ought to be advising. He ought to be advising and letting the American people know that the only way this stops is either A, the government stops spending, or B, I got to kill the economy. Simple as that. I got to put us into recession. So, and who's even going to know with the amount that they're spending, even if we go into recession, is that going to be enough? You're still going to have way too much debt out there in the economy and they're going to continue to spend because the Republicans sold out everybody. That McCarthy, the chairman of Speaker of the House, I should say, Speaker of the House, he gave the Democrats everything they wanted, then some. He got them through the next election. Whose side is this guy on? No more debt ceiling debates until after the next election. Thank you, Kevin McCarthy. You Judas, you. The Uniparty is very alive and well. Biden. This is why you're seeing energy stocks, not energy stock, oil rally, natural gas rally. This is all inflationary. This is your commander-in-chief, our commander-in-chief. I got a family-friendly show. Wrenching us. I won't say the other word, okay? Wrenching us. And it's also counterproductive, but that's what they want. This is what they want. They want a weak America. So we closed out the day on Friday with a daily chart that looks very good. The price action this evening is no surprise to me whatsoever. Now, I would not be surprised to see a continuation move higher day over day into tomorrow. If we close above 365 on the common stock of common shares of the triple Qs, I will probably close out my long puts until such time as we break back down again, and I'll put them back on so I have an insurance policy on my portfolio. That's the way we do it. So right now, we are in never, never land. So this is one way to look at this chart, is that we had a bullish day on Friday. And we're going to get a continuation move up higher on Monday. Okay. Let's go higher level view though. Let's go to the weekly chart for a moment. The market sends us signals. It's either we could acknowledge those signals or we could ignore the signals and we get our heads handed to us. So, yes, last week was an up week on the triple Qs. However, all up weeks are not made equal. If we had closed at the highs of the week last week, I'd be far more bullish than where I am right now. But we didn't. We rallied right up into heavy resistance, and the sellers moved in there and they sold with reckless abandon, putting us negative on the week. But then we rallied on Friday, salvaging the week. Now, another way to take a look at this daily chart with the weekly chart in mind is this, a different view. M2 money supply. This is the money supply that's out there. I'm going to go to another chart in a moment. Bear with me on this. Give me some rope, if you will. M2 money supply. Whenever it declines, the United States generally goes into recession. This is a chart that goes back to 1964. So when money supply declines, that means contraction of credit. There's not enough money to give out loans. That's why banks are saying, you know what, I need better qualified applicants on these mortgages to give out loans. So when you enter that environment, businesses can't refinance. They go out of business. Bad things happen. Yet, oddly enough, the U.S. economy, mainly driven by all the stimmy checks that went out several years ago, the fact that you've had student loans that have been on pause, you've had rent moratoriums that have now come off. People now have to pay their rent again. So a lot of that gave a life support that shouldn't have happened to the U.S. economy. That is all coming to an end. At some point in time, capitalism and socialism are going to meet. And since socialism right now, at least on student loans, on rent moratoriums, no longer had the lifeline of the federal government, capitalism then takes over and the law of supply and demand takes over. And the economy is going to get monkey wrenched somehow, some way. How it's going to divine itself, how it's going to display itself, I don't know. I'm not that smart. My guess is commercial real estate and the regional banks. That's my guess. Maybe it'll be China blowing up. I don't know. All I know is that the timing is right. I've been through 3 prior bubbles. I know what they feel like. And this is one of them. And to take a look at this chart here, this is the probability of a Fed rate hike in September. This was at 90%. We are now at 80%. It's actually dropped down from Powell's hawkish testimony on Friday. Now, this still implies that we're not going to get a rate hike, but it gives you pause and say, wait a minute, what are they expecting for November? Because if they're pulling back already on September, then you take a look at November, there's no October meeting. And by and large, they are expecting a rate hike in November. Let's move on. I'm going to go to the chart of the Qs again. It's a different chart. Bear with me. Market expectations of a Fed funds rate. So they're expecting rate hikes up and into January of 2024. And then I don't think this is right. They're expecting rate cuts. I don't think that's going to happen that soon. I think he's going to go on a very, very long pause cycle. I think that this could quite even be wrong in that I think he may go month after month, month over month of just pausing a month, hiking a month. And after that, for a few months, then pause for a long period of time. That's what I think he's going to do. One man's opinion. Mortgage applications dropping off of a cliff. What does this mean? What do people normally do when they go out and they buy a house? Well, realtors make a commission. They go out and spend. You buy a new house. Well, you buy washing machines, dryers, and whatnot. See durable goods numbers last week? Not good. Those are in the durable goods numbers. Washing machines, dryers, paint. You go to Home Depot. Those people that work at Home Depot, they go out and buy stuff. It's a ripple effect when people go out and buy new homes. It's huge. It's underestimated. But you don't have the purchases of new homes as we once did. Why? Not enough supply. That's why building of new homes is through the roof. Add this to the mix. Delinquency rate on credit cards, surge of defaults, ripping up higher. Last time we saw that, 2020. What happened? Massive correction in the equity market. Shiller PE ratio going into the new trading week. We haven't broken 30 in weeks. Weeks we've been here. So with all the selling in the market, didn't matter. We're still very, very expensive. S&P 500. Price to book value still at lofty levels. This is an expensive market on any metric that you look at. Very, very expensive. So am I going to allow for a moment one trading day on Friday, reversal day, or a gap up higher, which we're now pulling back on? We were up 1/3 of a percentage point. Now we're up on where we opened up earlier. We opened up at spot 17. Now we're back down to it. So what I want to know is, do we fail? I have the alert set up here already. Do we fail? Do we fade here? Because what I'm looking at, I'll get to in a moment, which would have me leaning into the short side. Corporate interest rate payments are about to rise. They're rolling over their debt from 2020, 2019, very, very low rates. That's those funds, those loans are coming due. Now they need to refinance at much higher prices. So what happens to the price of equities or the PE ratio when they're spending more money on service of debt? Well, the PE ratio goes up higher because they're not earning as much unless they raise prices, which is inflationary. What does Powell do if they raise prices? You guessed it. He jacks up interest rates. This is a very, very bad scenario to be in. And the chart I'm looking at is this one. I showed you this one initially. One view. Here's the view I'm looking at. Updated view. Head and shoulders setup on the triple Qs. And when I was probing around Twitter earlier, I had just created this new chart, and then I ran across this other chart of the S&Ps and another head and shoulder potential setup. He's got a question mark here. Open-minded fellow. I like that. And there's just because you have a head and shoulders setup doesn't mean it's going to break to the downside. It just means that there's a potential out there. And I think that there's a very, very high probability that this breaks south. Now, at the beginning of a market top, because these rarely, unless there's a big geopolitical event, rarely do stocks just go straight down. It's a process. And this most recent process began right here on July the 27th when we rallied, and then we had that reversal day. That was a warning shot across the bow. Now, yeah, it recovered for the next couple of days, but then all of a sudden, this was the double top we were watching. I said, it's not confirmed until we close down below the lows of July the 24th. We did that in earnest right here, the 4th of August. And then we went into our most recent correction. What happened on Thursday of last week? You guessed it. The same exact candlestick. Oh, close anyway. What happened on Friday? We're going to get a little mini rally here. Does it hold? I think no. I think that we're breaking south. So at the end of the, what I believe to be the correction that's coming up, where are we going to be looking? My guess is that the US dollar will be rolling over by the time that this correction is near an end. And we want to be looking at emerging markets. When the dollar breaks, we're going to be looking at not only emerging markets, but we're going to be looking at gold, the gold mining stocks, silver, palladium, platinum, all that stuff. It's priced in US dollars and it will all go up. If the dollar is correcting, you want to be in emerging markets as well. Why? They are extremely inversely correlated, meaning US dollar goes up, emerging markets goes down. When the dollar breaks, remember that emerging market debt is denominated in US dollars. So if the dollar corrects, that is like a tax cut for emerging markets. They don't have the debt we do. Why? Because they can't print money. But they are producers of raw materials and they are manufacturers. They are going to come out of this perfectly. They're going to be well positioned, especially these BRIC countries if they ever get their act together, in particular, India. I'm a big fan of India, Vietnam as well. I don't know if they're in the BRIC nations or not, but Vietnam as well. This is kind of misplaced, but we already touched upon this. Nobody's buying a house right now. Okay, let's do some chart requests. We have about 10 minutes to go. Pre-earnings trades. Randy, it's a valid point. I mean, here's the thing, is that I've had a lot of luck with earnings trades. I went back and I took a look at my my biggest drawdowns in my account over the past 2 years. And every single one of the biggest drawdowns were earnings trades. If I filtered out, if I went back and I took those trades out, my portfolio would be exponentially higher, even with the wins, because you may get a bunch of mini wins on those earnings trades, but all it takes is one big one to the downside, and all that's wiped out. It's not worth it. It's not worth doing it. So I would strongly suggest avoiding earnings trades. We had a great trade last week post earnings on NVIDIA. So you can still trade earnings, but do it post earnings, because once you put that trade on and the market closes and you're waiting for that earnings report to come out the after hours or the next morning, I mean, it's in God's hands, really. So it's best to avoid those types of trade and go for consistency. By far, it's the best way to that I've found to profit in this time of a market. Big. Is that Big Lots? Big. Okay. Bob, is your NDX future numbers correct? I see it dropping. Well, they're dropping off of the highs. Yeah. Actually, they're starting to stabilize now. Looks like we may get a breakout. They look accurate. Let's see if they break this out. Okay. It rhymes with ducking. Family-friendly show. David, hello, welcome. Jody Schwab. All right. Okay. Let's do it. Okay, that is Big Lots. All right, thanks, Pete. All right, let's get to it. Folks, we're going to be using TrendSpider, automated technical analysis, 35% discount code below. You know the deal. AMD. It held support last week. Actually, yeah, weekly chart. Yeah. Big down volume, though, but it held support. Stokes is still weak, trading down below 50. I don't like that. And it broke down below daily support. I would wait a couple of days on this. I would not initiate a new trade. I would see whether or not this is all a head fake. And if it is a head fake, this is a breakdown that's likely to continue. So I would be careful here, because we broke down below daily support on Friday, but we held weekly support. Weekly support has a higher precedence on our scale. Let's bring up weekly here. Why is that not showing? It's probably equal to this. Why is it not showing? Oh, it's the same. It's the same support level, but it's showing on a week. So, oh yeah, we broke, and I just zoomed in. Yeah, we broke weekly support last week. That's what. Now it makes sense. Okay. Yeah, I would avoid this. I would avoid this. I think we go lower. If they gap it up higher and it closes there, I would apply the 3-day rule. Meaning, if they close it above 102.50, I would say 1 day, 2 day, 3 days. After 3 days of it holding it, and you begin to see a rally up towards 105, okay, then I would buy it. Right now, wait and see mode. WEAT. This looks like it wants to go lower. This is a daily chart. Let's go to a weekly chart. Weekly chart, we're trying to probe a bottom here. Yeah, NQs are breaking out. There's no premium down there. I don't want to do at the money. I would look to go to the 5s or the 450s. There's no premium. So I don't think we're going to be able to do this trade. Maybe we'll buy the common. Maybe we'll buy a call spread, but it's got to become more oversold than this. So wheat, I would like to put an options trade on it, but not enough premium. They got to pay me. I think we head down here. $6 a share. I think it becomes interesting at that price point. Penn. Weekly view. It recaptured support last week. Yeah. It recaptured support. So this support level is holding. I want to see a retest of 23.47. What are the premiums here? No, it's not a good options trade. Daily view. They gapped it up higher on Friday. It reversed to close off of its highs. I would look for a retest on Penn Gaming. Watch it come in and do a retest of $23 a share, give or take a dime. And I'd be a buyer. It's looking good here. I'm skeptical on consumer discretionary, and this is like the Pimp Mac Daddy of consumer discretionary. SNA, Snap-on Incorporated. Is this a short? Yeah, it could be. It's broken trend. So this is a classic textbook example of what I always talk about. When you get a breakdown on one candlestick and then the next candlestick, they rally it back. These are just traders that are in denial. They don't understand what just happened. And sellers move in at that breakdown point and they get walloped. They have no idea what hit them. That's why it's so important to know technical analysis. So yeah, this is setting up to be a short. Now, that doesn't mean that we're not going to rally here first. If we rally up and into 268.76, interesting as a short. If it closes above that mark, I would stop out. But if it fails, then breaks down to new lower lows, I'd be leaning into the short on a close below 262 per share. But I wait for a rally back here, which I think you may get. I'm guessing that daily chart. Yeah, I think they're gonna pop this because watch what they're doing. Boom. So they bounce it off of the lower band of the downtrend channel. They're going to rally this. You're going to get a better opportunity to short this at higher prices. Look for a short. If they break it out and above 269, I would be eyeballing this volume shelf right here at 270, 270. That would be very attractive to me for a short entry point. PLTR for Pat. No new weekly lower low, but they tried to rally it. It was rejected. Volume was good, but a lot of that was selling. Momentum going in the wrong direction. You don't want these Stokes rolling over as they are. I'm not constructive here at all. You're seeing the same momentum lines on the Qs as well. Take a look at the Qs. Weekly chart. Look at the momentum. That's not sexy. I do not like that. Okay, so PLTR, beginning of a consolidation at best on PLTR. Same thing on the daily chart. Wouldn't buy it. I'd watch it, and that's about it. Big lots. This is interesting. Let's first go to a weekly chart. Very weak. Have they reported earnings yet? So we're at the lower band of the declining downtrend channel. This may catch a rally, daily view. On Friday, we saw a doji star formation. We had support at the bottom of this volume shelf at $6.09. I think you could buy this on spec, assuming that you get a breakout above this upper band of resistance. So I could buy it on spec, but I would use a stop loss, a very, very tight stop loss order below last week's lows on big lots. So big as a, oh, okay. Pete, big earnings due next week. All right. You got to avoid, pal. You know, it may look oversold, but my first trade on Netflix on an earnings trade, RSI was like at, I don't know. Let's bring it up here. It was pretty oversold. Yeah, that was right here. So RSI was already down below 30 on Netflix. What was it on earnings? It was below 20 on earnings. What did it do thereafter? It gapped down. It hit a low of 8.14 on RSI. That's Netflix. So just when you think that it can't go lower, they do. So please wait until after earnings. Sleep better at night. Trust me. I I preach what I've experienced, and I'm begging you to please learn from my own mistakes. And if you're going to do it, just stay very, very small. Okay, you guys are chatting. Okay, cool. All right. What else do we have here? Schwab. We'll leave it off with Schwab. Stupid question on volume shows. Do those show the numbers of shares owned at that price? It shows the level of volume at a particular price, basically the battle that took place between bulls and bears. The assumption being that once you get back to that support or resistance level, that same battle is going to ensue because you got the same guys looking at the same charts and they're thinking the same thing, right? So it makes sense in that they're all playing the same game by the same rules. So it works. It's crazy, but it works. Good question, though. You're welcome, Jody. You're welcome, Pete. All right, let's wrap it up with Schwab. Let's go monthly view here. I'm not liking the monthly view. I have accounts with Schwab, but I'm telling you right now, we break this support level, I'm going to be looking to move those accounts out to safer real estate because There's way too much speculation about Schwab being exposed to the regional banks. So I'm going to be watching this very, very carefully. In fact, okay, we're good. TZ Burton, take care. Hey, folks. Yeah, you have a great trading week too, folks. Have a profitable trading week. Please like, subscribe. Don't forget, we have the 30-minute chart club where we go over that small account. I got to figure out a new name for it, but we're building a small account from 20,000. We're going to see how far we can build it up. We're going to be doing private live streams on that club. So please use the link below, subscribe to it. Also, my 5-part video tutorial, my top 5 favorite candlestick patterns, free, link below. And don't forget TrendSpider, great supporter of this channel. Link below, 35% discount code. Awesome product. I use it all the time. And everybody have an awesome, profitable trading week. Be well.